Hi, David Bassanese here, Chief Economist at BetaShares, and this is a snapshot of my market trends report for the month of March. And again, what we did see in the previous month through February is another month of weakness in equity markets. The global all-country world index down 1.1%. After having declined 6.2% in January. So not a great start for global equities at the moment. The ongoing concern about US interest rate increases, the fact that US inflation remains quite high. In fact, there's so far at least no sign of a peaking in US consumer price inflation is still the main driver of global markets. But of course, a late breaking development through the month of February was the Russian invasion in Ukraine and what's now caused further upward pressure on oil prices. So at a time when global inflation is already high, central banks are looking to raise interest rates. Really the last thing we want is further upward pressure on oil prices, because it does really complicate the outlook for global markets. So as I speak today, the war in the Ukraine is still raging on, so we have to sort of wait and see how that pans out. In terms of sector themes, what we're seeing is, again, on the back of strength in oil prices, still high bond yields, or there's still central banks still looking to raise interest rates, particularly the US Federal Reserve. Sectors such as energy and financials are doing relatively better than others, and the technology sector broadly across global markets does remain under pressure. So the growth to value rotations of value sectors outperforming growth still remains the predominant theme within global equity markets. In Australia, we've seen relative strength in the resources sector, and our market actually held up relatively well last month, putting in a 1% price gain, again on the back of resources. Within the Australian market, the technology sector, again, as we're seeing globally, remains under pressure. So that there's one area of particular weakness in our market. Going forward, obviously the two key drivers for markets are going to remain the outlook for US interest rates and the war in the Ukraine. And we'll have to wait and see in terms of that war. Global markets, I think, it doesn't look as if that war is going to spill over beyond the Ukraine. Ukraine is still a relatively small country by global standards, so that in and of itself won't upset markets too much. But it's really the upward pressure on oil prices that remains a concern, and some of the implications of the sanctions in Russia, and whether that causes some pain in other economies and other banks, for example, that have exposure to Russia. The Fed, one bright silver lining here is that the war in the Ukraine looks as if the US won't raise interest rates by 50 basis points at the March meeting. So there's some, markets are a little bit relieved by that, but it still looks as if the Fed will continue to raise interest rates over the next few months. The war in Ukraine won't be enough to stop that happening. That's pretty much it for now. If you'd like to see the full details of my report, please visit the Insight section of our website. Thanks for watching, and I'll see you again next month.